Good afternoon, everyone. Looks like we just have a couple. We're going to give it a couple of seconds so that more people can come in. Apologies for the tardiness. I think we were like a minute or two over, so excuse us for that. But good afternoon, everyone. Good afternoon, Mike. How are you?
I'm doing well, and yourself? It was a great holiday break. How about you?
Doing good. Thank you. Holiday was good. Always, of course, wish it was longer. I was getting used to sleeping in.
That's funny.
All right, let's see. Oh, yeah, numbers just jumped up. So let me go ahead and share my screen. I think I confuse Zoom sometimes because I have so many projects I'm working on. Can you see my screen okay, Mike?
Yeah, we're good to go.
Okay, perfect. So good afternoon, everyone. My name is Lauren Simpson, and I am with the SBDC, or the Small Business Development Center. We are a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, if you read that slide in front of you, you'll see how we're funded, but essentially, we offer services at no cost to you because your tax dollars have already taken care of our fees. So for the Los Angeles network, which is the network that we represent, myself and Mike included, we cover the Los Angeles, Santa Barbara, and Ventura counties. So again, if you are a small business within those counties, LA, Santa Barbara, or Ventura, please be sure to get in contact with one of our service centers. The map in front of you shows where our centers are located. Essentially, we're out in the valley as well as over down in Pasadena, over to Laverne. We have a location at the University of Laverne, all the way down to Long Beach, so Long Beach City College. Here's a deeper dive into what it is that we do. We offer no-cost business advising. And so you're able to sit with incredible experts. Our network is expansive and we offer a ton of topics. You're able to sit with people like Mike or GB. Welcome, GB. And you're able to sit with other experts who have expertise in marketing and again, finance and taxes, as well as licensing and permitting, business planning. If you're a handyman and looking to go into construction, you name it, we've got a topic or we have a business advisor who can assist you. And then we also offer virtual trainings, much like the training you have joined today. So again, please be sure to get in contact with us today. We are here to help you. You can give us a call at 866-588-7232, or you can go online, smallbizla.org/new client. Now, if you've reached us outside of our service area, meaning you are outside of the Los Angeles, Santa Barbara, or Ventura counties, please go to americassbdc.org/find-your-SBDC. Go ahead and stop my screen share. Quick housekeeping. Let's be sure that we put all questions into the Q&A. So questions in the Q&A, and then we'll reserve the chat for any links or honestly, any conversations you guys are looking to hold, but let's keep it on topic. So all questions on topic, any kind of chatter, let's keep that on topic as well. With that, Mike and GB, I'm gonna throw it over to you guys.
Thank you. Hi, GB.
Hey there, Mike. Hey, Lauren.
I hope you had a wonderful holiday break. And to all our participants, welcome back. Thank you for joining us. Today, we're going to be covering insurance. GB, this may end up being a 2-week webinar. There's a lot to cover. And of course, your help and support and input will be extremely important as we go through this topic.
And may I make a quick announcement?
Yeah,
I will
please.
not be here next week. I'm out of town for a business trip, so I'll be here the week following.
Got it. Understood. So with that, I'm going to go forward with the presentation. And I like your holiday colors, GB.
Thank you, sir.
So we're going to be talking about small business insurance, just insurance in general. And quite honestly, there's a lot to talk about here. So I'm starting out with some facts. This is 2020 average personal injury jury awards. I'm bringing this up for a reason. Just look at the numbers. When I first looked at this, I'm like, wow, this is astounding to me. So an average jury award for product liability, the median was almost $3.9 million. And the average was $7.1 million. Just sit back and think about that for a second. And then you see all the other claims. Business negligence, median for 271,000. Vehicular liability. These numbers should be sobering to those of you who have businesses. Now, GB, before we go forward here, any thoughts about what you're seeing right now on the screen?
Yes, I always encourage my clients when they say they can't afford insurance, I share these numbers with them and I say, can you afford to pay this liability? And what a lot of times my clients don't understand right away is insurance is designed for broke people. I'm a broke person. I cannot afford to pay a $7 million payout. If I'm making $20 million a month, maybe I can afford it, but even then, why would I want to hemorrhage $7 million? So the insurance is designed to help us, bail us out if somebody has a real or perceived injury and some jury or some judge rules in their favor, we are on hook. And sometimes clients say, well, I got nothing to lose. That may be true today, but they can come after your future income and future assets as well.
Thank you for that. So please keep these numbers in mind as we go through this presentation. And there's numerous types of insurance. Some may not be applicable to you. We understand that, but you need to protect yourself. So Keyman Life Insurance, you want to talk about this a little bit, GB? You probably have it in place for your own business.
Yes. If you have anybody who's a key person for the success of the business, it could be the CEO, a manager, even an employee, and you know that if they left, a good significant amount of your revenue will leave with them or may leave you because for a variety of reasons, the key man, key woman, key person life insurance allows you to get an insurance payout to hire and train and continue your business operations.
Right. Now, people sometimes think it's only limited to CEOs or key executives. It's not true. You might have a chief scientist here as an example, who is critical to generating income. Maybe this is patent pending, something like that. Any employee, you can take out Keyman Life Insurance on. Keep in mind, the family members of the decedent or someone who is disabled are not the beneficiaries of the Keyman Life Insurance policy. It is the company that is the insurer. Obviously, you can have a separate policy in place for family members, and many companies do offer that to executives and managers. Obviously, please put any questions in the chat room, and GB, perhaps you can monitor that. Okay, so now we're moving on to general/business liability insurance. And my opinion is that the vast majority of small businesses need to have this in place. Think about the numbers that we saw, okay? So it covers bodily injury, property damage to somebody else's belongings, personal injury, advertising injury. A lot of people don't think about advertising injury, but it exists, like libel, slander, okay? So if you're working directly with customers, if you own or rent a building for operations like a retail space, or if you're going to someone's home, for example, or if you're a shipper, a carrier of some sort, you need to have general business liability insurance. Even though you may have an entity, a corporation, LLC, or partnership that provides protections against potential lawsuits for your business activities, you still need general liability insurance. You need both. TV?
Actually, this is a key component. As we know, a couple of years back, AB 5 was passed, where the state of California deems every worker to be an employee unless you can demonstrate that they are not an employee, that they are an independent contractor. One of the key components is if you hire somebody who is an independent contractor, your general business liability policy may not cover them. So in order to prove to the state or to an auditor that you did hire a bona fide independent contractor, you want to ask them to carry their own general business liability insurance and to give you what's called the COE, coverage of or evidence of coverage, EOC. So this way you can keep it in your records, because if they do any harm to anybody, personal or bodily or property, if they do harm to somebody else, your insurance company may go after their insurance company to be made whole. So this is a key insurance, not just from an insurance and a tort liability. It's also important from the liability of misclassification of a worker.
Great point. Thank you for that. This gets a little confusing, so we need to discuss claims made policies versus incurrence policies. And I understand why there's confusion. When you first look at that, you say, what is though? What does this all mean? So with an occurrence-based policy, you'll be protected as long as the loss happens while your policy is active. Okay, that's a key consideration. Policy has to be active. You can have something called a long tail event, which is, it extends beyond the policy term. So as long as you're insured when the accident occurred, you can file a claim with your insurer. A claims made policy is different. Your coverage kicks in when you file a claim during the policy period, as long as the event happened after the retroactive date, and there'll be a retroactive date associated with a claims made policy. Understand the difference, because this applies to the vast majority of insurance policies between these two. And there's going to be a difference in rates depending upon which policy you choose. GB?
I think you covered it well.
Okay. We covered Keyman policy. We'll go past that. Professional liability, otherwise known as errors and omissions. So the key coverage for that is negligence, misrepresentation, inaccurate advice, which includes errors, mistakes of judgment, omissions. Once again, personal injury like libel or slander. So this can happen when there's missed deadlines, where there's work oversights, where there's budget overruns, where the work is incomplete, or the quality of work is in question. Breach of contract, negligence claim. So think of yourself as an engineer, and you're responsible for putting up, designing a building, maybe a construction engineer. And you make an error of some sort, which causes a problem. Could be a monetary issue, which means there's a budget overrun. If you don't have errors and omissions in place, that could be very costly for you. And people can go after your homes, your personal assets. So licensed professionals should carry professional liability insurance. And I believe some boards, you have to correct me if I'm wrong, require it, GB. Am I right about that?
You are right. And one thing I'll add here, if they're two, it's the same insurance designed for a different market, errors and omission, professional liability. If you have to get professional liability insurance, engineers, architects, CPAs, lawyers, and etc., you want to make sure you have in California, you have a professional corporation. Many times, almost on a weekly basis, I come across professionals who are practicing under a professional license, but they have a general stock corporation. So that's where your liability issues can also stem up. So make sure your underlying entity is also proper professional entity so that you may secure professional liability insurance.
Right. And I personally can't stress how important it is for you. You might be saying, well, I'm just a software consultant. What does it have to do with me? Well, a software error could lead to a data breach, which could lead to a significant loss of income and revenue or harm to a company and to its customers. So even if you're just doing software coding, for example, and you're a professional in that area, I believe you should have an errors and omissions policy in place. Now, medical malpractice is a form of professional liability insurance, and this applies to healthcare providers. So once again, it covers negligence, improper practice, harm, intentional harm, or even non-intentional harm. Once again, inaccurate advice, professional mistakes, and error. Okay, now there's something called the MICRA Act, which was passed back in 1975 in California, a long time ago. It's still around, it still exists. There's been attempts to change this through various propositions, and they have not been passed. So back then, there were really outrageous jury awards for medical malpractice. So legislature put this in place to put a cap on non-economic damages, like pain and suffering, and it's still in place. The cap is $250,000, and that includes damages for lost wages, medical bills, other measurables, okay? Plus it places a cap on the attorney fees on a sliding scale basis. Keep that in mind if you're a medical professional, which includes nurse practitioners and all other types of medical professionals. By the way, attorneys can also have a malpractice insurance policy in place, but typically it just be professional liability insurance. Is probably mandated by a licensing board. Key consideration, if you work for a health insurance company or health company, they might have coverage, but you might want to consider buying your own individual policy to protect against claims outside the scope of your employer's policy. Make sense, GB?
Yes, it does.
Yeah. You want to talk about directors and officers, GB?
In what capacity? Like the
What it
difference
covers,
between them?
why it
Or-
exists. Yeah, why it
Yes.
exists.
So whether you are running Facebook or you're running a mid-sized company or you're running a corporation of one, you as the incorporator sell the shares and you become the shareholder of your company. As a shareholder of the company, you hire the directors, which could be you or somebody else on your board of directors, and then the board of directors hires the officers such as the CEO, the CFO, and the secretary, so on and so forth. If somebody ever claims that you did something wrong, they may try to come after you and try to pierce a corporate veil from multiple directions. The limited liability that we hear about when it comes to corporations or LLCs, it is primarily extended only to the members of the LLC, not the managing members necessarily. And it is extended to the shareholders, not the officers or the directors. So the example I use with my clients is if you own the shares of Tesla, if Elon does something that is egregious, that is wrong, that is criminal, and the company stock takes a nosedive, you can lose the money invested in Tesla as a shareholder. But that's where your liability ends. You cannot be held liable for Elon's actions. Now, the board of directors and the other officers who may harbor that toxic environment, if somebody claims that, could be held liable. So in your workplace, if you have employees, if you have vendors, if you have anybody who comes to your business and they incur some sort of a harm, could be a tort or it could be contract, the insurance for directors or officers protects you because you don't have limited liability when it comes to running the affairs of your entity, whether it's LLC or corporation. Does that make sense, Mike?
Yes. Now, what do you tell people who are offered board positions?
They should ask the company to buy insurance for them so that they can, because again, just like in a malpractice, as a director of the company, when somebody comes to you for direction, hey, what should we do? Is this a good strategy or not? And you say, yes, let's do it, or no. And somebody says, you know, because he said no, we missed an opportunity. Your decisions can be held against you. So having this type of insurance protects you from any error in your judgment or an error in your opinion.
Great. Thank you so much for explaining that. And you can see on the screen there's different types of coverage, but just be aware that this is something you should put in place, especially when you have employees, because the employees are litigious. Now, product liability.
May I add one more thing to that?
Sure.
Sometimes people volunteer to be on the directorship for a nominal fee or maybe no fee sometimes. Just because you're not being compensated doesn't mean you have no liability. If you are a director and you are an officer and you do certain things that can be held against you, even though you did not receive compensation, because your decisions or opinions did somebody else harm, you can be held liable. So maybe definitely you want to ask for the company that is asking you to be their board of director to get this insurance, even though you're not getting any compensation.
Great, thank you for that. And we'll move on from there to product liability insurance. Probably the vast majority of, or all of you have heard about product liability insurance and product liability claims. So this is when someone is harmed by some sort of use of a product, okay? And what does it cover? The legal fees, the medical costs, compensatory costs, business damages. Remember, there's a limit on non-economic damages passed by, but that's still, I think it actually applies here too. So how can harm be occurred? By how the product is manufactured, how it's designed, how it's marketed, or just misuse. Even though you have warnings on a package, and even though you have explanations of how the product should be used, that doesn't mean someone can't sue you, and they may win, okay? And if you don't have product liability coverage, then you still have to defend and pay attorneys or settle. So you may be doing everything right, and this is true in many cases, but you still have to defend and pay for legal costs to do settlements. If you're involved in pharmaceuticals or food or anything with body contact, maybe products you put on your skin, anything that has moving parts, small toys. If the industry is subject to frequent lawsuits, you should seriously consider product liability. Now, if someone is selling t-shirts, what's the likelihood of being harmed, okay? So you just have to decide what is the risk associated with the product that you're selling. And how much coverage you buy depends on what you're selling, how you're selling it, where you're selling it, right? The likelihood of being sued. It's a must, even if you're willing, the manufacturing, sale, distribution process is marginal. You might be a link in a chain, supply chain. When someone gets hurt, they go after everybody, not just the person that sold the product. Okay. Anything to add?
No, I think you covered it well. The key thing I'll re-emphasize that you have said, you could be a small player, but if you have deeper pockets, be well insured, because a good lawyer, depending upon how you define good, a good lawyer will go after anybody and everybody to make their client whole.
Right. Well, the insurance companies will go after you, right? So
yes,
there are insurance companies that will sue you and then go after your insurance policy.
Indeed. And if you don't have insurance policy, they're coming after you. And that's the key thing. A lot of times people get very righteous about stuff that, hey, I'm right. Well, you may be right, but it's just an opinion. If a judge rules against you, if a jury rules against you, and even long before that, you have to pay your own legal fees. If you are suing somebody for employment-related damages, you may find a lawyer who works on contingency. In product liability cases, if you are the defendant, I don't think, Mike, would you think you will ever find somebody working on contingency that, hey, if you win, you pay me. If you lose, don't worry about it?
No.
Doesn't happen.
No.
So you have to lawyer up. You have to pay the court fees. And not to mention, the biggest damages that you may suffer, even if you win in court, is time away from work. While you are going through depositions, you're going through the legal battles, you're talking to your lawyer, you are not working, and your business may suffer.
Right. And it's also can link back to design flaws in your product. You may say your product is perfectly manufactured, and there was never a problem with the way your product was manufactured. Fine, but how was it designed? And how was it used in relation to that design? And did you give proper instruction as to how it was used? Think about a chain on a bike and it breaks. Chains break on bikes break. Somebody gets hurt, they fall, hit their head, go to the hospital. That person may sue you, the retail bike store.
Yeah. I mean, remember the Challenger disaster? The O-rings brought down a huge engineering marvel, just simple O-rings. So you never know where your weakest link lies, and you may be that weakest link.
Right. Thank you. So business interruption insurance is important as well. I think all these insurance policies are important depending upon where you are with your business and industry. If something happens to your business, like a fire you see on the screen here, or there's been hurricanes, I mean, most recently in Florida, Hurricane Ian. Businesses were absolutely destroyed. Livelihoods were lost. And those who do not have business interruption insurance, I'm sure many of them did not, cannot get compensated. So this covers operating expenses and lost income for a set time period. It's not indefinite. There will be a time period set in the policy. It will cover a mortgage. It will cover rent and lease payments. It will cover lost payroll expenses you have to pay. It will cover taxes, loan payments, relocation to a new or temporary location. So think about the folks in Florida that had those businesses destroyed. This insurance will pay for all those expenses, and then they can set up again. So, you know, what's the risk that you're facing in regards to a disaster, right? But GB, in order to prove it, you need good financial records.
Indeed.
Yes?
Absolutely. Just because you have insurance doesn't mean much. You have to have good, proper records. So you're absolutely right. It's what you can prove. It's not what you know.
Right. So if you're not on top of your financial record keeping, if you're behind on your tax filings, if you're behind on your bank reconciliations, if you don't have, if you're looking at your financial statement and you don't know what you're looking at, that's a problem. Okay. Understand your financial statements, understand what at risk. And yes, these terrible things do happen, unfortunately, and protect yourself. Workers' compensation. There's a lot of litigation over workers' compensation. We know that. The state of California requires all employees to be put on workers' compensation. GB, you mentioned earlier, AB 5, which requires all workers to be employees unless they meet an exception, like a business-to-business exception. Why did the state of California put that in place, GB?
Because if they incur any harm, they cannot be covered under workers' comp if you have an independent contractor. So because the workers' comp is a no-fault policy. So even if your employee deliberately hurts themselves, the workers' comp policy will cover them. But if somebody is an independent contractor, they must have their own insurance. Otherwise, they will come after you. And if somebody is a bona fide independent contractor, they must have self-insurance.
Right. So the state of California has lost out on hundreds of millions of dollars because of the gig economy. And they want employers, companies, businesses to pay into workers' comp and uninsurance and other programs, right? Now, the rates that you have to pay on workers' compensation depends on the classification of the workers and what they're doing, and also depends on your history of claims. There's a lot that goes into this. There's people that get paid a lot of money to figure out what the rates should be. In the state of California, it is a felony not to carry workers' comp insurance for your employees. The state takes it that seriously. Now, you have a family business. You're hiring. I have a family business. You know, my wife works for me, right? She's my employee. Do I have to carry workers' comp insurance? Absolutely. Even though it's a family member. You cannot just say, oh, it's just my cousin. I'll hire and bring him on and do some work for me and he won't be an employee. Nope. Done and over with. GB, comments?
Yeah, actually, this is absolutely right, because there used to be, or there still is, a cap. For example, if you have an employee, they pay to the state disability insurance. There has been a cap on how much they can put in. Effective January 1st, 2024, California has now announced there is no cap. Whatever you pay your employee, they have to pay the insurance premium on everything, every dollar that they earn. And you're right, it's about money. People want more benefits, and benefits cost money. So this is an insurance cost that even the employees carry. And if you misclassify an employee, the state misses out on the state disability insurance premiums, on the workers' comp premiums, on the unemployment insurance premium. I mean, the list goes on and on, not to mention the federal government with the Social Security and Medicare. So all of these things, they come into play. And if you have the workers' comp insurance, or if you have workers who are employees, even, for example, I think one of the bullet points says, if you are an owner, is not required. California says there are some professions, such as I think it's roofers, even though you are self-employed, you still must carry workers' comp insurance because it is that risky of a profession.
Thank you for that. We went into a lot of small businesses with husband and wife teams and adult children working for them. And the thought is, well, do I really need to put all these programs in place for my family members? Yes, they're not excluded. Okay, keep that in mind.
May I add one more thing?
Sure.
Talking about misclassification of workers and workers' comp. I have a client who is an employment lawyer. He was hired by a divorce lawyer because husband and wife were divorcing 3 months ago. Part of the divorce settlement came down to be that, husband, you hired me as an employee. I helped you build this business for the last 10 years. You never gave me a salary. So she, part of the divorce proceedings, also sued the husband successfully and got a huge settlement for wrongful employment practices, that I worked for you and you never gave me a fair wage. And to add insult to injury, EDD got involved saying, oh, we never got our cut either. So pay her, but make sure you don't forget us. And they're actually, the sad thing is, they're getting more money than she is.
Wow. Yep. So there's a case study. Trade credit, we mentioned this before. So we get questions every once in a while. How can I protect myself against people not paying me? And we know it's frustrating. We all not haven't been paid. I haven't been paid. GB hasn't been paid. It happens in every company, right? And you do your best efforts to be reasonable, to provide good service and good products, and to accommodate people. But sometimes people are jerks. That's the way it is. And they refuse to pay you. Okay, no matter what action you take, there's only so many things you can do. You can try to work out an agreement, extend the payment terms, whatever you do, they just refuse to pay. I've faced it numerous times in my career, for myself and for people I work for. And GB, I'm sure you see it all the time with your clients. So you can bring people to court. Well, what's the cost to bring them to court? How much time is it going to take you to bring them to court? And you probably prevail, but what's the likelihood of collection? That's why this exists. So what are the considerations? Well, what's the average days for collections in your industry? Some industries, your average days for collections might be 120 days. It might be even longer, 150 days. And if you're panicking because someone's late, but that's the average days for collections in your industry, well, maybe you're jumping the gun a little, right? The insurance company will want to be sure that you have a proof of a contractor agreement or an order in place, that you have properly fulfilled that contract agreement and order. And they'll probably want to look at the record of communications that you've had with this individual or business that refuses to pay you. What's your relationship with the customer? Can the collections be resolved in a creative manner? Can you do something to help work out an arrangement? And you can always look at legal remedies. And what is the value of that collection versus the impact of the insurance rate? I mean, you know, it depends on your particular business. As DB says, it always depends, right? You want to talk about this a little bit?
Yeah, I think you covered it very well.
Okay. Inventory stock insurance. So again, going back to the Florida example with the hurricane, lots of damage to inventory and stock, right? You can get coverage to pay for that loss of inventory. You can get coverage for, I know a business right now that has 20,000 boxes of ice cream that they have made that they have to dispose of. It's no good. Cost them a lot of money. They don't have this insurance. If they had this insurance, they'd be compensated for that loss. That's the type of thing we're talking about. So it covers raw materials, work in process, finished goods, product which is on consignment. And for those who are unfamiliar with consignments are, those are products held at somebody else's location for sale through somebody else's location. Okay. So again, considerations: what's the value of the stock versus the cost of insurance? What's your damage and loss history regard? Do you have any of the claims that you put through? If you consistently put in claims, it's a problem, right? How many of you have gone to look at the obsolescence value of your inventory? I used to do this quite a bit once a month when I was responsible for handling these types of things. Because the value of your stock may not be what you think it is. And once again, you have to prove it, GB.
Correct.
Okay. Contractors building risk insurance. So if you're a general contractor, any type of contractor for that matter, this covers remodeling projects that are in construction. And so if something happens to that site, you can get paid for your construction materials that are at the site or in transit. You can get paid for the temporary structures like fencing and scaffoldings that fall down. You can get paid for labor costs. You can get paid for construction equipment and supplies at the site. Now, your standard property insurance does not cover structure, materials, equipment, and supplies for construction. Keep that in mind. What's the risk of damage and loss during construction? Now, contractors have to carry bonds, and bonds protect customers, not the contractors. Going back to the Florida example of the hurricane that happened in Texas, lots of hurricane. Those contractors who did not have this insurance in place and they were working on the construction activities lost it. And by the way, they might be sued for those who are contracted to have those buildings or have that remodeling done. Please discuss commercial auto insurance, GB.
If you have a personal vehicle insured under your personal insurance, Farmers, AAA, Geico, if you drive that vehicle for business purposes, any damages that you may cause to others or any damages caused to your property and or your vehicle or to you, your passengers, will not be covered because you are using the vehicle against the scope of the insurance policy. So this is where commercial auto policy could be a standalone policy that covers your personal vehicle or the company vehicle when it is used for business purposes, or it could be a rider on your personal policy. Not every insurance company offers this, but you can have a rider that covers because you're letting them know, hey, I use my vehicle for business purposes sometimes. Insurance companies will charge you extra because you may have your laptop, you may have your other business belongings in there. So having a commercial auto policy on its own or having a rider, which is an additional revenue covering certain instances for your business purposes of the vehicle are required. Otherwise, God forbid, you're driving on the 405, you hit somebody's Rolls Royce or Tesla, and you'll be out of pocket $100,000 plus any other damages that may be asked of you or sued you for.
Now, what about the Uber, Lyft, DoorDash drivers who use their own vehicles?
That's a great question. So let's say when you are, in most of those cases, if somebody's in your back seat because you're traveling with somebody, Uber's policy may cover your vehicle and everybody in the vehicle while you are driving occupied miles. But if you're going to pick somebody up or you're going to go pick up the order, neither Uber nor Grubhub nor your insurance policy will cover you unless you have commercial auto insurance or you have a rider on your personal policy where you've told your insurance company that I will use my vehicle to drive for Lyft and Uber or Grubhub or anybody else. And if they allow you to be covered for that period of policy, you may be A-okay. But otherwise, empty miles that you are in between jobs, you're on your own.
Now, there are times when employers may ask those who don't normally drive to go deliver something, a product to someone, or deliver papers to someone. What about that situation?
You have even more risk there because not only are you authorizing someone to drive your personal vehicle for commercial use, which may not be covered, on top of that, the employee may be covered under the workers' comp if some harm is done to them, but anybody and everybody else, if they hit the pole. And here's the thing though, sometimes people say, but GB, I'm the best driver in the world. Well, that may be true. If somebody else does something stupid, intentionally or unintentionally, I mean, there have been cases where somebody could have a medical emergency or somebody's drinking and driving. If they hit the car that your employee is driving, you can and you will be held liable. So it's not just you or your employee that you may love and trust. You don't know. A lot of people in this world.
Thank you for that. We'll go on to the next slide. That's great information. So cargo and freight insurance, I'll talk about this. So cargo and freight insurance covers damaged or lost cargo. And how can that happen? Accidents, natural disasters. Maybe the carrier just abandons it. That has happened, where they just dropped it off somewhere, they didn't want to deliver it, and now you're looking for your cargo and you can't find it because the shipper abandoned it, or a customer rejects it. Or actually, it's true, pirates exist. Maybe you've heard of some piracy events that have occurred in the past number of years, or acts of war. This is different than carrier liability insurance that would be offered by the shipping companies. That covers only the cost for the shipment. It doesn't it doesn't cover the value of the goods. So cargo or freight insurance offers more comprehensive coverage against damages or losses than the insurance being offered by the carrier liabilities. Now, of course, the cost of the insurance depends on the value of the goods, how much coverage you want, and many other factors. Cargo insurance and freight insurance is often used kind of in the same vein, but there's actually a difference. Cargo insurance is for products transported by land and air. Freight insurance is for goods transported by trucks, and cargo insurance is, freight insurance is also for, I believe, shipping. All right. So if you're ordering products from China and you want to be sure that they're covered and they're valuable to you, maybe I know people who order jewelry from China, from overseas, valuable products. They should have cargo insurance to protect against a loss. And if you have, but again, we're here to give you some general information. The better thing to do, if you have questions, is talk to your insurance carrier, broker, or agent. Many, by the way, they specialize. So someone that knows medical insurance doesn't know about cargo insurance. Find the right insurance carrier broker. And anything else on this one, GB?
I would just add, be careful in your documents. When do you become the owner of the cargo? Because there's bill of lading that dictates, do you become owner when it's at the warehouse of your vendor, at the port of where it's shipped from, or it is at the port where it is delivered, or you become the owner when the goods are delivered in your warehouse. So your bill of lading should stipulate when is the ownership and or the title, because they're two very different things. So ownership, title, and or possession when it is transferred to you, and that will determine who should pay for this insurance and who's the beneficiary of this insurance.
Great. That's what the terms FOB mean, free on board, and that determines when the title is transferred. This has become much more impactful to businesses than 10, 20 years ago. Data breach insurance. You've heard the news stories where some major business national chain has been hacked and personal data has been leaked. Well, there's now insurance to cover the cost of those data breaches. But it's not just those large national firms that are subject to this. your own small company, you have 10, 15 employees, something like that, or 5, obviously can be hacked and you can be subject to ransomware. I've gotten claims for ransomware, but I ignore it and I have protections. But it does happen. And of course, GB and professionals are required to maintain tight security over their client records. And if they don't, and there is a hack, those professionals are subject to fines and penalties and possible disciplinary action. GB, you want to talk about this?
Absolutely. People trust us with a lot of private information. My wife jokes that sometimes I am a counselor. Sometimes I know more secrets about my clients than even their spouses do. So the data breach can come in many different variety, and you would not want your data, you would not want your personal information out there in public being misused. So at the very least, if you have employees, you maintain their health insurance information, maybe their name, social security, address, bank account information. Anytime you touch any data that is beyond public information, such as name and address, you want to be very careful with data. I try to take the best measures I can. I use best software I can to do so.
Yeah.
And I would encourage you to do the same in your business, no matter how small or large you may be.
Right. This is a subset of cybersecurity insurance. And there are 2 different types of, let's say, coverages. One is called first party, and one is called third party. The first party coverage applies to the company that buys the insurance. And there might be a forensic investigation, again, fines, penalties, monetary loss, hardware, software damages, the cost to notify customers, and you might have to put in system upgrades. The third party coverage concerns those who have been affected outside of your company, like customers, okay? And that covers legal expenses, damages, settlements, claims, because customers get upset. Clients get upset. They will sue you. And it happens quite frequently. Look at the considerations. What is a data breach? It's a confirmed incident in which sensitive, confidential, or otherwise protected data has been accessed or disclosed in unauthorized fashion. That can happen in any number of ways. You are, even inadvertently, you don't put a password on your records, or that password is easily hacked. It could be any number of ways. 60% of small businesses close permanently within 6 months of suffering a breach. So before you say, no, I don't need that, consider that statistic, okay? And look at the average costs. Yeah, go ahead, GB.
Now, I was going to say that data breach, it says here, weak credentials, malware, software. The biggest data breach can happen just based upon you and me being silly. In my office, I'm a stickler. Any client information cannot be left on the desk. If we leave the office, close the laptop, put the file in a locked filing cabinet, because you never know who can peek in, who may have access to the office, the janitorial staff. Sometimes people mistakenly throw something in the trash. Your janitorial staff may be great, but you leave a sensitive document lying around and people might think, oh, this is nothing, and it could cause harm. So data breach can also be very analog. It doesn't have to be just digital. And one thing I always encourage my clients, work with your insurance agent, because the insurance agent works for the insurance company. They are paid by the insurance company to come to you and work with you on all of these insurances on the best practices, so that, because they know if you're doing everything right, their likelihood of paying on a claim is diminished. So the insurance company will send their agents to come and work with you so that you can have proper mechanisms to reduce your likelihood of a claim, whether it's physical, whether it's, what is it called? The employee workers' comp or data breach. Work with your insurance agents. Now, if you work with an insurance broker, they work independent of an insurance company, so you may have to pay them, but prevention is better than cure. If you have a good broker, they may charge you a small fee to come and do an insurance audit, but you will be so thankful in the long run.
Now, there are people that will take work home with them. What do you tell your clients who have employees who take work home?
We have a policy. I never allow anybody, any of my employees, including myself, I never take any work home. And I encourage all of my clients because, again, I'm not always worried about everything, but I think about everything. God forbid on the way home, I get in a car accident. You know, on 9/11, we saw all the paper was flying all over the place. If somebody hits you, something can be taken from there, digital or physical or otherwise. So I always encourage my staff and all my clients, get your work done at work and secure your information.
Thank you. I've heard situations where laptops were stolen out of cars and sensitive information, weak passwords hacked, and now that person is in trouble, as is that business, because they violated company policy, which means you need to have company policies and procedures in place to show that you are properly handling these issues.
And you have to enforce those policies. I see a lot of clients with beautiful corporate policies with no enforcement. And if you file a claim under data breach and they look at your records that there was no enforcement, there was no bite to your policy, your claim may be denied. So just having insurance, I always tell my clients, just having insurance doesn't protect you. It's like having a gym membership. If you never show up, doesn't matter. You have the best gym membership in the country. You will not see any benefits. Having a policy doesn't protect you. You have to exercise the due process and the due care under that policy. So enforce those company policies. Hold your employees liable.
Right, and that extends to all devices, including cell phones. And I realize employees might say, why do I have to have a policy for my own personal cell phone? Because of these issues.
Yeah. No personal calls on a business phone, no business calls on a personal phone.
Right, and no transactions on a personal phone. Absolutely never, no transactions on a personal phone. Okay, so this is a subset of cybersecurity insurance, which we covered data breach, but there's other types of activities that can be covered, such as business email, business economic email, and social engineering text, business email compromise. And I've seen it happen. What happens is somebody claims, steals the identity of an executive and sends an email, hacks that account to one of the employees at that company and says, hey, Tom, go ahead and wire money to this person. They need it for this particular business reason. And if there is not proper procedure in place, that person responsible for wiring the money does it. And this has happened. And this type of coverage will protect against that. GB?
No, I think you covered it well. One of the attendees is asking if you are an insurance agent. So is the answer yes or no? No, right? We're just advisors. We've seen enough.
We've seen a lot of it. Keep in mind that GB and I talk to hundreds of people a month, thousands of people in a year. And we have long extensive careers. So we've seen quite a bit. And I did a lot of research on this.
Yeah.
As GB does. Yeah.
We learn from other people's mistakes, and this is not an endorsement for Farmers Insurance, but this is why I love their commercial. We know a thing or two because we've seen a thing or two.
No. So what we can do is refer you to insurance brokers, agents, or carriers, and we have that. We have lots of referrals at our fingertips. Now look below. The FBI discourages victims from paying ransoms because there is no guarantee that the hackers will remove their malicious software or restore the data. They're right. I know that there was a pipeline ransomware attack earlier in the year. By the way, the FBI, I think, covered most of the money. And they encouraged that pipeline operator not to pay that ransom for this reason. Plus, it encourages further hacking. So if you're ever subject to ransomware, depending upon your risk and your industry and what you're trying to achieve, et cetera, I think you might want to take this warning seriously. So the coverage includes damaged reputation, Sometimes the policies cover the insured company for losses related to vendors, the theft of company's digital identity, etc. And believe it or not, I didn't think we'd do it, GB, but that comes to the end. Now, I didn't cover employee health insurance. I didn't cover forces insurance. I mean, there's a whole bunch of other insurances. Employee health insurance is a topic unto itself if I didn't want to go into. Anything else to add, GB?
No, I think you did a beautiful job. Insurance is a huge topic. And one thing I'll say, are there bad insurance agents? Are there bad insurance companies? Yes, every industry, every profession has its bad apples. A lot of times claims are denied on the basis of some technicality because the insured didn't have the proper procedures or didn't have proper preventative measures to mitigate a claim. So my takeaway from your presentation is to work with the insurance agent to say, all right, what can I do to make sure I have done my due diligence, I have done my work, so if something happens, you will be more inclined to pay the claim because it is an occurrence that was accidental and unintentional in nature. Because if you are careless, just like an auto insurance, if you have an accident, they will cover you. But if you're drag racing with your car, no coverage will be extended. So work with your insurance agent, work with your broker, spend the time, spend the money. And I think it was a beautiful topic, Mike.
Thank you, GB. For those interested in this presentation, I will send it to Lauren. And I believe there's a YouTube channel, Lauren, if you put that in the chat room, that would be great so people can go ahead and review it because there's a lot of information here. GB won't be with us next week. He's traveling, as he mentioned. I will probably cover some sort of topic like new laws coming into effect for 2023, affecting small businesses. And then GB, it's on you after that. Okay.
Sounds good. I'll cover a topic on retirement plans the week after that. So I look forward to that presentation as well.
Awesome. Thanks so much. Have a great trip. Thank you, everybody, for your patience today and your attention. Bye.
Thank you, Lauren.